In this video, we'll be diving into the world of secured loans and giving you a complete comparison of the best options out there. A secured loan uses one of your assets, such as your property or your home equity, as collateral. This means that if you fail to make repayments, the lender can repossess and sell your asset to cover the debt. It's crucial to think carefully before securing debts against your home or any valuable asset, and to compare lenders authorised and regulated by the FCA, the Financial Conduct Authority. Let's have a brief look at the different types of loan that are available. Secured personal loans. These versatile loans can be used for any purpose and are typically secured against a house or a car. Homeowner loans, also known as home improvement loans. These loans are secured against your home equity and are specifically intended for home improvement purposes. Second charge mortgages. These loans, also referred to as home equity loans or home equity lines of credit, HELOC, allow you to use your home equity for various purposes. Debt consolidation loans. Designed to help you pay off other debt, these loans can be secured or unsecured depending on the lender's requirements. Guarantor loans. If you don't have any assets to secure a loan, a guarantor loan allows you to use a guarantor's home as collateral, providing an alternative option. Now that we understand the basics, let's dig deeper into how secured loans actually work. In most cases, you receive a lump sum of money that you'll need to repay over an agreed loan repayment period through monthly installments. It's important to note that early repayment of a secured loan may result in some additional fees. But what happens if you're unable to meet your monthly repayments? Well, it's essential to communicate your financial difficulties with the lender. They may be able to renegotiate the repayment terms to make them more affordable for you. However, failing to address the issue can lead to payment difficulties, negatively impacting your credit score and putting your listed asset at risk of repossession. Now let's tackle a common question. How do secured loans differ from unsecured loans? While secured loans require collateral, unsecured loans don't. The absence of collateral in unsecured loans means that lenders can't just seize your assets if you default. However, they can take legal action, leading to additional costs and potential repercussions. You might be wondering, are secured loans easier to obtain? Generally speaking, securing a loan with an asset makes it easier to get approved compared to unsecured loans. Lenders feel more comfortable granting secured loans because they have a means of recovering any arrears. However, personal finances and credit scores are still taken into consideration, and a low credit score may lead to loan denial. Now we have a good understanding of secured loans and how they work, let's dive into comparing some of the best options available in the market. Remember, it's always a good idea to shop around and compare multiple lenders to ensure you're getting the best deal for your specific needs and financial situation. The good news is that most UK banks offer these types of loans, along with a range of other options. Some banks even allow you to access the loan specifics to apply online. However, keep in mind that a few banks might require you to visit a branch or make an appointment for more information. But banks aren't the only ones in the game. Online loan providers also advertise secured loans in the UK. However, be cautious when dealing with online brokers. While they can search through various partners to find a loan that suits you, they might not have access to the best deals or the lowest interest rate. Plus, hidden fees and commissions can end up costing you more in the long run. You might even find secured loans advertised by building societies, mortgage specialists, and even supermarket finance departments. So where's the best place to get a secured loan? Well, it's a bit tricky. Banks typically offer lower interest rates, but some online companies can match or even beat those rates. The key is to search and compare loans across the market to find the best deals for your specific needs. Now let's talk about interest rate. The best secured loan interest rates depend on how much you want to borrow. What might be considered low interest for one amount might not be the lowest for another. As a general rule, the lowest interest rates on secured loans range from 2% to 5%, and getting a secured loan with an interest rate below 10% is considered a great deal for most people. You should also know that some loans come with a fixed interest rate, which remains the same throughout your monthly payments. Others, however, have a variable interest rate that can change up to 8 times per year based on the economy and the Bank of England's base rate. Now let's get into the question you've been waiting for. What are the best secured loans? Well, it's not a straightforward answer. The best loans depend on two main factors: the current market and your personal situation. Lenders' rates can change rapidly, so it's important to stay updated. And of course, your own financial situation will determine the kind of rates you're eligible for. So what should you consider when looking at secured loans? Don't just focus on the interest rate. Take a look at the bigger picture. Check for closing costs, early repayment fees, appraisal fees, and any additional loan or administrative costs. These factors can significantly impact the overall cost of your loan. Now let's talk about how to compare secured loans. Start by using a third-party comparison website to get an overview of available options. But don't stop there. Conduct your own independent research and create a spreadsheet to compare representative rates and the possible additional loan costs. This will help you make accurate and informed comparisons. To get an even better idea of your loan repayment costs, you could use a secured loan calculator. These calculators, found on lender websites, allow you to enter your desired loan amount and repayment period. They'll give you an estimate of your monthly repayments and the overall cost. Just keep in mind that these calculators are only so accurate, and they may differ quite considerably from what you're actually offered. Secured loans can be a viable option when you need access to large amounts of money and are willing to use your assets as collateral. However, it's crucial to carefully consider the risks involved and choose a reputable lender. Take the time to compare multiple lenders and review their terms and conditions, and assess your own financial situation before making a decision. Always remember to borrow responsibly and only take on loans that you can comfortably repay. If you have any doubts or questions, it's wise to seek advice from a financial advisor or a professional. If you're interested in finding a loan for your circumstances, then simply click on the link in the description below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it will give you access to quotes from around the UK tailored to your circumstance. It's totally free to do, and of course it won't affect your credit score. Click the link below and fill out the short form to try it out.